Hello everyone, Stephen Furness here, Director MGD Wealth, and today is the 3rd of June 2025, and I'm really pleased to be joined again by Jack Sutherland, who's Head of Investment Strategy Australia for WTW. And WTW, as most of you know, is a major asset consultant partner of MGD Wealth. Welcome, Jack.
Hi, Stephen. Thanks for having me.
Very good. Good to see you again. Just for all our listeners and viewers, as always, the content of this update is of a general advice nature only, and we obviously always encourage people to seek personal advice on any issues that arise that they want to seek clarification on. So today, Jack, it's 2 months exactly since our last update, which was back on the 3rd of April, which happened to be Liberation Day. A few days later was the market lows in terms of recent share market valuations and where markets got to. But 2 months later, it's as if nothing happened in terms of at least the equity markets around the world. We seem to be somewhat back to previous highs of late January, give or take. What's going on? Were the markets sort of starting to ignore the tariff discussions and that? What's the house view from your point of view?
Yeah, Stephen, I don't think that markets are necessarily ignoring the tariff issues, but since Liberation Day, there has been some positive developments that markets reacted fairly well to, namely the level of tariffs or the expected level of tariffs has been reduced relative to what was announced on Liberation Day. Obviously, those announcements came as a surprise to the market. What was announced was a lot more significant than a lot of market participants were expecting, including ourselves. That's now been tempered back through various delays, negotiations, and we expect those negotiations to continue and for the eventual level of tariffs to be a lot more in line with what we were expecting originally, and that's probably the case for a lot of market participants.
And I overlaid in recent times, we've had the Australian election come and go with a resounding victory to Labor. We've started to see the first signs of what might be a more pronounced interest rate cutting program, at least here, and we were behind global trends on the interest rate cycle. Your view on what sort of the next 6 to 12 months holds economically from a domestic point of view?
Yeah, sure. So, I mean, as you mentioned, the RBA has started its rate cutting cycle. So that basically means that we see that Australia sort of passed the low point of the economic cycle that we've been through, and the RBA has basically successfully engineered what they were trying to, which was a soft landing. Through that period, the labour markets remained very strong. Inflation's come into the RBA's target band, and given sort of economic uncertainty around the world, they've taken the decision to begin the rate cutting cycle now with a recent 25 basis point rate cut. And as I said, the economy has remained fairly resilient through that whole period, but a lot of that resilience has been driven by high government spending, which made the RBA's job quite difficult in trying to get inflation under control, but it did mean that the economy was able to kind of tick through that period. What we haven't seen a lot of, though, is private sector spending over the last sort of year or more. Households and businesses have remained sort of relatively dormant in their investment in the economy, and so that's left sort of a bit of a gap there. And we think that there is scope for that to change over the near term. We've got interest rates cuts that have begun, and they'll sort of take effect over time. We're expecting tax cut to be legislated as the government sort of promised, and hopefully, given labour market resilience, that real wages will sort of start to tick up, and that will be a boost to the Australian economy, hopefully going forward. But I don't think we'll be exempt from the geopolitical turmoil that's likely to continue to affect the world economy and world markets.
Yes, no, I totally agree. We had investment committee here that for the portfolios that WTW helps manage on the 19th of May, so 3 weeks ago, and one of the issues that came up then, or topics of discussion, was around the challenges you're finding in a strategic review of portfolio strategies just at this point in time, because of all the flux that's on and going on in the world. Is that sort of still the case, that it is challenging to reset broader portfolio strategy when we're not entirely sure of the environment we're going to be operating in?
Yeah, it definitely makes it more difficult, but the approach that we've taken with those portfolios is a diversified approach where we're trying to limit reliance on any particular driver of portfolio outcomes, and that will allow us to sort of weather the storm, if you will, and to sort of provide robust returns through time.
Yeah. No, exactly, and that's largely always been the case. Diversification is always the first principle for running portfolios.
Absolutely.
On the positives or the negatives in the short term, that summary of what you're seeing on both sides of positives that we could look forward to versus some of the challenges at the moment?
Yeah, I mean, everything has been sort of quite reliant on what's coming out of the US, how strong the US economy is. US equity markets have been a big driver of global equity return. And we do think that the US economy has remained fairly robust. The hard data, the hard economic data, so inflation, GDP numbers, that kind of thing, is still showing that the US is not in a recession or in some sort of stagflationary environment. We do have a little bit of concern around softer data, so that's more sentiment-driven data, so consumer sentiment, business sentiment, which has depleted a little bit in recent times in the US, and that could just be reflective of uncertainty that's in the market, not necessarily issues with the US economy more broadly. So we think that the tariff issues will continue until we reach an eventual landing point with those negotiations that are continuing. But we also see that the Trump administration has a lot of pro-growth policies that are yet to take effect. We think it's likely that the tariff policies have been sort of front-loaded into his administration so that there's time for recovery before the midterm elections at the end of next year. And that those pro-growth policies will be more impactful sort of later this year and early next year. And we think that should help continue the US cycle for the time being, and should be fairly positive for US equity returns and global returns as some of this more chaotic news starts to wane.
Yeah, well, look forward to less chaos. Just in wrapping up, and over a long time we've talked about our goals funding approach to portfolio construction. Just on the shorter end, the more conservative cash based part of portfolio construction, where for a lot of retirees we're funding personal cash flow from. The returns on that part of portfolios is obviously linked to the RBA cash rate, and we've talked previously today about the expectations of that rate cut cycle continuing. What's the WTW house view on where that might get to in terms of quantum of rate cuts, etc.?
So we've seen 25 basis points so far. Based on the strength of the Australian economy right now, and us seeing the likelihood of that sort of improving, not deteriorating, we don't think the RBA will cut much more than another 50 or so basis points. So that should be positive for lower risk portfolios that have some reliance on shorter duration investments that are reliant on the level of sort of cash rate to deliver that return. And yields are obviously in a more attractive point than they were sort of 3 or so years ago. So that should be quite positive for those types of portfolios as well in terms of fixed income investments.
Yeah. So in summary, we're not on any journey back to where we got to on extremely low interest rates.
No, I think that's very unlikely at this stage, and I think central banks will probably try to avoid getting into that position again if they can.
Yeah, very good, very good. All right, Jack. Well, it's a good snapshot. A couple of months after our Liberation Day update, where we weren't sure where things were going. So appreciate your time today.
Thanks, Stephen.
And, we'll catch up again soon.
Sounds good.